The U.S. dollar is lower versus the three major currency pairs: the euro versus U.S. dollar, dollar versus yen, sterling versus U.S. dollar. To start off this new trading week, I'll go through the technicals that are driving these currency pairs to kickstart your day in the U.S. session. So let's get started. Yields are lower. U.S. stocks are lower. The U.S. dollar is lower to kickstart the new trading day and new trading week. Of course, we have always concerns about new tariffs and the trade situation and so on and so forth. So that may be weighing a little bit on things. But let's and we have the Federal Reserve meeting this week, of course, which will take place on Wednesday. What will the Fed say? There's expected not to do anything, of course. So we'll see what they have to say as far as future policy action. So let's start off by taking a look at the euro versus U.S. dollar. On an hourly perspective, we saw the market trade up and down trading last week, but we did make a run down toward the 1.1271 to 75 level, and actually also moved down toward this last low price here before we started this move to the upside to the highs for the year. That 71 to 75 level, you have to go to the daily chart. If you take a look at this high price, it came in at 1.12754. If you take a look at 61.8% retracement, it comes at 1.12709, and we broke above that level and for the most part stayed above it, except for that little low price around the 65 level, and that's where we went down to in trading on Thursday's trade. On Fridays, you can see we held the 71 to 75 area right through here. That gave the buyers a go ahead to push to the upside. The failure above the 200-hour moving average, however, sent the price down lower into the close. And in trading here today, what are we doing? We're seeing a rebound back higher. That move back to the upside. Well, first of all, the low price that we saw in the first Asian session came up ahead of the 71 to 75 level. That was positive. It went up to the 100-hour moving average in between the 100 and 200, found willing sellers. Came back down to this area right through here where we had a swing low, swing low. Those were the low prices, not from last week, but from the week before. And we did find support buyers right there. So, these little nuances of the tactical price action seem to be holding up. We are now trying to get back above that 100 and 200-hour moving averages. As you can see, we're trading 34.0, not 40. So we're in between the 36.8 and 51, 52 area on the top side, but we did squeeze above that level and then rotate back to the downside. So there is some concern there. We'll see if the price can continue its move to the upside with the euro moving higher, the dollar moving lower. But right now, the looks like it's trying to fail up on the break of that level. So let's take a look at the dollar versus yen next. And like the euro versus U.S. dollar, some technical levels did hold very nicely. And trading on Friday, the high price, as a matter of fact, came up right up to the 200 bar moving average on the 4-hour chart. The last time the price was above that level was way back here, back in beginning of April. So it was about a month away. A month later, the price high came back up to that 200 bar moving average and found willing sellers pushing price all the way to the downside before rebounding. And pretty volatile Friday trading here today. We rotated back to the downside, got below this swing area through here, where we had some swing lows and swing highs into this area before deciding on the downside. We returned back to this area and trading last week. As you can see, it was kind of sloppy around the level, but breaking below that level and then holding this level has the traders looking at the 100 and 200-hour moving averages on the downside. That these moving averages will be the barometer for trading here today. If we move below, it's more bearish. If we, the buyers come in on the dip here, could see a rotation back to the upside, and the battle is on between the buyers and sellers with the 100 and 200-hour moving average acting as support. So be aware of that. Finally, let's take a look at the sterling versus U.S. dollar. And what do we see here? Well, the obvious pattern here is the 200-hour moving average, 200-hour moving average, 200-hour moving average, 100 and 200-hour moving average. Both of them converge at 1.33259. The reason why they're converged is because we've been in this, sort of trading range through here. I'll put it here. We did have extensions here and here. But as you can see, the last 1, 2, 3 different lows off 3 different days have come down toward this 132.59 level. We got a break below that level in order to increase the bearish buys. Couldn't do it in the Asian session here today, and that gave the buyers a go ahead to push to the upside. We moved above this level right through here where we had swing low through here. Admittedly, went above and below it in trading the last few days, but we did base against it and trading here today, also giving the buyers a go-ahead to push to the upside, and that's where we stand with the 100 and 200-hour moving average as the barometer for more bullish above, more bearish below, and trading here today. Traders can lean against that level with a stop above and hope for a rotation back down below 132.92, and then maybe back down toward the 132.59 level. That's the hope for sellers against the 100, 200-hour moving average. If we move above that moving average, then it opens the door because we haven't been above it for a few days here. The last time the price traded above the 100-hour moving average was back on, what is that, Wednesday's trade. Wasn't that long ago, but the fact that we held 100, held to 200, held to 200, held to 200, held it, then trying to hold this level right here is something to be aware of. And if the price is going to go higher, we need to get above those levels. So there you have it. A look at the 3 major currency pairs to kickstart your trading day and your trading week. Good fortune with your trading. Bye-bye now.